So for attendees, if you have any questions, please type them into the Q&A box. We will try our best to answer and accommodate them, noted for time constraints. In the meantime, I will now introduce Mr. Hamsa Malik, Director of the Macroeconomic Policy and Financing for Development Division at ESCAP, who will now give our opening remarks. Thanks.
Thank you, Wynn. Distinguished participants, dear colleagues, good afternoon and a warm welcome from Bangkok to this regional training workshop on breaking down barriers to payments, the evolution of regulation and the winning solutions in the digital age. We are hosting this event today to bring together policymakers, regulators, and private sector stakeholders to discuss the accelerated adoption of electronic and digital payment solutions across the ESCAP region in the context of the COVID-19 pandemic. We will explore how the adoption of such services have supported micro, small, and medium enterprises and private sector development, and how digital payment solutions can support the acceleration of progress towards the SDGs. This workshop is the final event in our training workshop series under the global initiative towards post-COVID-19 resurgence of the MSME sector, following our national level workshops that we held in Bhutan and Bangladesh. I would like to thank our consultants, Douglas Arner and Mushir Ahmed, for their consistent support and excellent collaboration in the organization of this workshop, and for preparing a case study booklet of best practices, which will be published shortly on our event page. I would also like to acknowledge the contributions, dedication, and hard work of my ESCAP colleagues, such as Alberto Isgut and Viravin and several others in organizing this training workshop. So before we begin the workshop, let me highlight some broad context setting points. We all can understand and appreciate that the COVID-19 pandemic has changed how we conduct business, how we organize our life, how do we do work, so on and so forth. The adoption of digital finance and technologies supporting such solutions has essentially accelerated from aims and ambitions to reducing physical contact to reducing the spread of COVID-19. This gradual shift has created a proliferation of new technologies, services, and platforms, which in turn has allowed companies to engage a previously untapped client base. This is particularly evident in the digital finance area, and especially for digital payments. Payments are a key foundation of all things related to financial services and many things beyond that. With many Asia-Pacific economies being cash heavy prior to the COVID-19, many MSMEs were reliant on cash rails. This was accompanied by low levels of digital literacy and technology use. Not only were MSMEs affected by a slowdown in demand, but many of them relying on physical brick and mortar location faced further financial burdens in staying afloat. COVID-19 pandemic brought into urgent focus the need to digitally transform these cash economies and enable development of digital rails. Today, our speakers, including representatives from the private sector, will bring into focus the various models through which digital payments can be facilitated to provide winning solutions. At the same time, our public sector speakers will highlight the evolution of regulation and the challenges that lie ahead as our economies become increasingly digitalized. We will also talk about the role of private enterprises, startups, and innovation, and the role of policymakers and government rules and pertinent infrastructure. With the pandemic, a real need was created, and with users pivoting to digital and contactless payment solutions, we have seen significant uptake across the Asia-Pacific region on the adoption of digital payments. We now have to examine this growth and see how we can expand the base further to ensure further enhancement of financial inclusion for the rich or the poor, for the urban or rural, and for large corporation and micro, small, and medium enterprises. I'm sure that policymakers, researchers, and other stakeholders in Asia Pacific region will find the discussion and policy recommendations of this workshop very beneficial to their work. We have an exciting panel of speakers today with us. I wish you a very productive workshop. Thank you once again, and wishing you an engaging and productive workshop. Back to you, Win.
Thank you, Hamza, for your opening remarks. We now have Mushir Ahmed, founder and managing director of Fintech Asia, assisting ESCAP with this project. He will highlight some of the best practices from the ESCAP region to set the context for our discussions. Over to you, Mushir.
Thank you, and thank you, Mr. Hamza. I'm looking forward to making this presentation, and I thank you for the opportunity to present different use cases from across the ESCAP region, looking at how payments have transformed MSMEs world and what are the key lessons that both policymakers and private enterprises can learn from this. I'll be sharing my screen shortly. Please give me a second. So as Mr. Malik also mentioned, we are seeing a transformation across the region when it comes to digital finance adoption. The ESCAP region has seen different approaches for this driving the digital adoption, and there are many lessons that can be learned. MSMEs advantage of the businesses that are run globally, but also in the ESCAP region. In many cases, they form over 90% of all businesses and employ over 50% of the working population. Hence, it becomes very vital to ensure that these SMEs could take up digital services under the pandemic to keep the economy going and to ensure that we don't have economic collapse beyond what is already happening to the impact of the pandemic. We'll be looking at 8 case studies from different jurisdictions and looking at the best practices and lessons. These cover a broad spectrum of economies. We are looking at use cases from the large major economies, but also emerging and developing economies in the region. And these are examples of how fintech can drive the adoption of digital payments and also support sustainable development in the ESCAP region. So we'll start off with Dana in Indonesia. It's a popular payment wallet application in Indonesia, which enables fast and cheap offline payments. This ranges from small and medium transactions to barcode-based payments for in-store purchases. So the key element or the theme of the Dana case study is around the success in expanding financial services to street vendors and the informal economy. Indonesia is predominantly made up of over 64 million MSMEs, contributing over 60% of the GDP and employing a very large number of the workforce, or 97% workforce. Now we have a particular vendors and street vendors in Indonesia called the warung, who operate typically with a tarp or a tent, just on the street side. They form part of the large unbanked population and rely mostly on in-person transactions. It's very essential to have them engaged with the ecosystem. Dana started offering a cash collection solutions for the warung and other MSMEs. So in a sense, using QR codes and using the Dana app, the merchants could collect payments, and this was very beneficial. In addition to this, one of the key things that Dana did was they ran large-scale literacy campaigns and also made the onboarding processes for warung simpler. So looking at a tiered KYC process, so you can have the small vendors come on board quickly. This was supported by the Indonesian government. They ran a host of different campaigns, such as the Belanjadu Warung Tetangga campaign and Daftarkan Warung Sekitar with the government. And this was to enable users to show, register details of a warung in the neighborhood. So if I'm a Dana user, I can go on the app and say, hey, I have a warung that sells, say, condiments near my neighborhood. This is the address. This was very beneficial because now users could find warungs in their neighborhood and support the local economy. The Bank of Indonesia supported this overall ecosystem through the launch of the unified QR code QRI in 2019. So just before COVID, so it was very useful to have that system in place. We saw over 5.3 million merchants sign up in the first year, and of which 80% were MSMEs like the Varung. This number has tripled over the last 2.5 years, with over 15 million merchants in Feb 2022, with close to 55 million transactions volume on the QRI. So key lessons, getting a buy-in from digital finance applications from informal sector is crucial. Focusing on capacity building and technical assistance and lowering digital literacy barriers are key to successful digital finance adoption in developing economies, while cooperation with the government can be very highly incentivizing for the users and also help with interoperability and security concerns. Next case is TrueMoney app. This is a flagship digital payments wallet of the Ascend Money, which is part of the CP Group conglomerate. Users can make a variety of digital payments as well as top-up services across their use cases. They are based in Thailand, but also growing across Southeast Asia. We're looking at how they help modernize MSMEs through an integrated financial services offering as well as CRM tools. Thailand has over 3 million MSMEs, which contribute to 35% of the GDP. This number was higher prior to COVID, closer to 40%, and the Thai government is keen to push this number up to 50%. Now, almost 62% of the SMEs experienced a drop in business income due to COVID-19. Part of it was due to the impact of tourism not being at the same scale or drastically reduced during COVID-19. SMEs needed support to digitalize their processes. Now, with TrueMoney, there were two key elements that helped their growth. Number one is they, by having been owned by the CP Group conglomerate, which also owns 7-Eleven, they were able to add more users through 7-Eleven. So a lot of store owners offered easy onboarding and incentives to users on using the wallet, which was typically, if you're a fintech player, you can't go build out a merchant network to onboard customers. This was already there for them. So end users could easily come on board, and 20% of current users at 7-Eleven actually now use the TrueMoney app. On the other hand, TrueMoney used and brought in new products for MSMEs to execute B2B payments, allowing for acceptance of payments from by QR code for offline and payment link for online. Now, this grew by 75% over 2021. They supplemented this with a membership mini program. Now, as we've discussed, a lot of these MSMEs typically are not using any CRM tools, if at all, right? They may be using some basic Excel sheets or, literally physical books, cash registers for their management of their invoices. With the membership mini program, they could access a fully integrated CRM solution with one-click subscription, a very cheap subscription, and could also integrate discount coupons and auto point collection while enabling transactional data. We saw this massively in places like China, which helped using data analytics for a variety of use cases of fintech. Here now you're offering this to the merchants, which then enables them to pinpoint and better source the inventory, sell products that are selling better, and also to manage their financing in a better way. Through the CRM, TrueMoney could see more data, and they also provided credit support for over 88,000 TrueMoney agents, as well as their MSMEs. The use of QR code payments via prompt has now seen over close to $10 billion dollars worth of transactions in 2021, and Thailand is now the 4th largest real-time payments market globally. Lessons: integrated approach is important for digitalization of MSMEs, going beyond just QR code-based payments, which we see across the region. CRM tools for brick-and-mortar businesses are essential for long-term digitalization, and a structured regulatory plan for digital adoption can be very beneficial. We saw that with Indonesia, but also with Thailand having been driving digital adoption for many years now, and PromptPay was among the early real-time payment systems in the world. So this is very beneficial when things turned towards digital only during the pandemic. Going to GCash, GCash was founded in 2004. Again, has roots in mobile payments through a telecom provider, helps not only with typical payment wallet options, but also has a money transferring facility, which is with the mobile applications. So the use case is about integrating the remittance value chain with e-commerce. Philippines has among the largest online adoptions in the world, with over 10 hours of time spent online daily by on average. 4 hours of that is spent on social media, which is the highest in the world. This is peculiar to Philippines, with 70% of the population having access to social media, but only 30% having a bank account, right? So you could see that there's a disparity in use of financial services online. And we also know that the overseas foreign workers contribute almost 10% of the Philippines' GDP. This is largely remittances. So a lot of the offline players, such as the sari local convenience stores, which sell snacks and necessities in the rural areas, struggled during the pandemic. With GCash, they could start selling online through URL links and post it on social media and whatever, Instagram, Facebook, which are very popular. Whereas if you were a brick and mortar store, you could use the QR code on demand. Now, the key element with using the remittance value chain was, because of these online URL links, now overseas foreign workers could purchase groceries or any other or products that their families wanted directly through the GCash enabled app and through the sari stores. So they knew where their money was going, but it could also be effective and did not have to depend on banks. And if people had to go and withdraw through remittance windows, they would have to go in person. And with the lockdowns, that was very hard. GCash also worked with the government for dispersing financial aid, which was close to 16 billion Filipino pesos, supported 2 million Filipinos. You can see the transactions of P2P QR payments in Philippines, and with GCash increased significantly over the first year of the launch of the payments. The BSP, the central bank, has also introduced P2M QR code merchant payment in 2020, which led to 50% increase in transactions. Lessons: we have countries with large unbanked populations, which have a high social media presence. Fintechs can leverage of that to fulfill the gap by enabling the cross-border payment. Quite often, fintechs are in a closed loop within the local ecosystem, but by enabling the cross-border payment through social e-commerce transactions, a large overseas population could contribute and elevate their concerns about how the funds are being spent and make it effective real time. And policymakers need to also use these services. So one is promoting these services, but also if you have the governments using these services, it adds an extra value to the users and also encourages others to come on board quicker. Next one is 360 digital tech, with the largest economy in the ESCAP with China, right? China has had digital adoption over the years being very significant. 360 digital tech is part of the 360 group, which was a cybersecurity company initially, and has grown into being a significant player to enable SMEs in rural China. Their focus has been on increasing financial inclusion for SMEs through data analytics. Even in, with China having high digital adoption, we still have what 400 to 500 million people who don't yet have access to internet and mobile payments is close to a billion people. With them being away from major urban centers, they lag behind their urban counterparts in economic value when it comes to mobile payments. This is increasing. We are seeing a high increase in rural internet adoption percentage in China as compared to urban. 360 focuses on access to rural areas like chicken farms in Guizhou to family-run hotpots. SMEs in the region typically operate through cash-based transactions, in particular tier 3, 4 cities and the rural parts, and it is very difficult for them to get credit because of not having enough data. So 360 launched 3 different products, one being a buy now pay later product through Zhetiao, then Xiaowei for microfinance, and Fengxi for installment loans, which is slightly different to the BNPL. Now the Xiaowei Dai was an important product that enabled capital disbursement for small and micro-sized businesses through their online lending platform. accounting for almost 30% of their total loan book. Essentially, what they did was they would review the SMEs through a dual risk management model, which is looking at the creditworthiness not only of the SME, but also of the owner, and looking at alternative data to realize how much can be given. So by having this risk metrics, they were then able to grant credit to over 7.3 million applicants, in particular MSMEs, agricultural sector, and sole proprietorship. Some of the lessons learned was driving digitalization through rural areas has to be prioritized as much as for urban centers, even in countries with significant economic development. Alternative data and risk models for low value credit is a good way to go. We've seen microcredit being very successful with lower default rates, and this can be applied to MSMEs, which are cash heavy. And by having specially tailored products for SMEs, you can have higher utilization and be able to find the right investors or lenders based on the risk appetite. That's what 360 does in this case. Moving from China to India, the second largest economy, third largest economy in the region, but biggest in population, and now seeing the largest real-time payment market in the world. PhonePe is a payments app that allows the use of not only of payments, but also has allows users to invest in mutual funds as well as buy insurance plan. It's owned by Flipkart, one of India's largest e-commerce players. Now, PhonePe, while you had many of Indian mobile payments go across the country, PhonePe specifically targeted tier 2, tier 3, and tier 4 cities in India. Their aim was to reach as many jurisdictions as possible. They now have a coverage of over 16,000 or close to 16,000 towns and villages, covering 99% of the PIN codes in India, which is massive given the size of the country. Now, a key element for PhonePe's success is the efficiency and the infrastructure that is provided through the India stack in the form of the unified payment interface, an open interoperable ID-based standard adopted by over 200 Indian banks, which allows for merchants to integrate through QR codes very easily. Since its inception, over 100 million UPI QR codes have been deployed for accepting merchant payments. It is a massive undertaking. You had 1.2 billion people onboarded on the India stack through the Aadhaar platform, which is essentially the biometric ID for Indians. This proved to be a key enabler for MSMEs during the COVID-19 pandemic. UPI processed over 9 billion contactless merchant transactions, totaling almost $80 billion for 2020-2021, which is a key timeline for the impact of COVID, when you have started off with a multi-week lockdown in India, and then you had a major impact in the second wave as well. UPI's transactions are now going into almost $1 trillion for 2021, and they crossed 5 billion transactions in March of 2022. Through PhonePe, businesses could come on board and list their store on the PhonePe, while also people could withdraw cash through the PhonePe ATM and accept PhonePe QR code payment. So you could go to a merchant and withdraw cash if you needed to in store. MSCPs could offer samples of the products and services via a rewards app and advertising with the PhonePe app. And PhonePe also has an integrated POS solution to track the transactions and for easy record keeping. So an integrated and holistic solution. A national ID infrastructure was very vital for this. This was developed essentially at a low cost and easy to deploy. India is an emerging economy, $2 trillion economy, looking to grow to 5 trillion soon. But with the Aadhaar and the India stack, it was very important to see this growth in payments, and we're seeing this rapidly increase in the last few years. The interoperability of UPI is very important. It allows for easy transfer of funds from any wallet to any bank and vice versa. And with enabling regulations, low-value transactions have a zero to no fees or low fees and can be scaled very rapidly. Targeting merchants for digitalization can help fintechs carve out a substantial market share in the market. PhonePe actually has one of the largest, if not the largest, percentage of total UPI transactions done in India. Now on to Kaspi Fintech. They are based in Kazakhstan, part of the Kaspi Bank, and they have a super app. It's a two-sided super app, on which on one side serves the consumers and end users. On the other side, it is supporting the merchants. So key here is they were using existing data sets to assess MSME credit worthiness, a bit similar to what 360 Digital was doing. However, in this case, they were providing a mobile commerce solution as well. In Kazakhstan, like with many of the ESCAP jurisdiction, you have high mobile penetration of over 90%, with a relatively lower banking penetration. We have now seen non-cash payments increase by 5x in the last 5 years, with internet mobile payments constituting 83%, up from 22% in 5 years ago. Now, Kaspi provides POS terminals integrated with the Kaspi Business mobile app. So any payments that go through the POS terminal can be tracked, and you can provide analytics on top. This app was also used for delivering over 60% of the government's COVID relief payment for during the pandemic. The Kaspi marketplace offers 5,000 services and 1.2 million products. So it just tells you that's a big space for users to come on board and utilize and engage with customers. It's a unified shopping experience. With the marketplace, all the transactional data is used for providing financing for MSMEs. Merchants can get instant business credit without collateral and documentation, and this is up to 20% of sales with Kaspi Pay. Right, so now as a fintech, you know how much transactions are taking place, so you can say, hey, okay, up to 20% of whatever is being done, we can provide that. They have seen a significant growth through this. They've seen almost 350% year-on-year increase of merchants to over 160,000 merchants on their m-commerce platform, and consumers of almost 5 million users on the m-commerce platform. Lessons, enabling MSMEs to traditional transactions can be done through focused online marketplaces. And this also allows channels for marketing and sales. You can use the digital existing data sets for closing the information asymmetry in assessing MSMEs, because typically they don't have documents that are useful for banks to do credit financing. On the other hand, digital adoption can be used by fintechs through proprietary infrastructure, where policymakers can leverage the time to implement large-scale changes. We're down to our last two use cases. bKash in Bangladesh, again, a mobile financing services. They've been around for a while, since early 2010s. 2012 is when they started a big focus and have been extremely successful. Although Bangladesh is well known for its microcredit, the MSME market is highly cash only. This contributes to 25% of the GDP, and only 30% of the MSMEs have formal access to banking, which is with less than 10% of the licensed institution providing them access. In June 2016, bKash introduced what they call a personal retail account for MSMEs. This came into a major focus during the pandemic. This account allows MSMEs to collect bKash payments from customers easily, and this is both QR code as well as through a PRA number, so unique identifier number that each merchant has. Now, interestingly enough, going beyond the payments and cash collection through agents, bKash is used, has started targeting payrolls, right? So they have launched a payroll solution for factories to disperse payments to their employees and workers. Again, typically can be very cash heavy, given many of them may not have bank accounts for the employees and workers. And through this payment solution, over 800 factories and conglomerates are paying wages to the employees through bKash. And now these employees can go and use their bKash for a variety of use cases that we already discussed. We've seen bKash facilitate payment of salaries and bonuses to 1 million workers in the garment sector during the lockdown period. They also help disperse the government's stimulus packages for export-oriented industries. In addition, using all the data they had, they offered a collateral-free instant loan through partnership with Citibank. CYTY Bank, which is a local bank in Bangladesh, for a digital nano loan, which helped MSMEs with the credit challenges. So an integrated approach for using a physical network and infrastructure. So a network of agents is quite critical for the financing. bKash used their thousands of agents to influence the MSMEs to come on board, and also for the onboarding process in itself. With the trust-based process that we have, it can be very useful. Digital solutions can enable the delivery of payments for workers who were only paid previously with cash, and now having a wallet, they'll then go and use it. And by driving the change, the survival and recovery rates of businesses was significantly elevated. We saw much better recovery rates of businesses who were using digital versus those who were still cash-based. The last one is PayPay in Japan, which is probably one of the older developed economies in Asia. Although you have a high banking penetration in Japan, the pandemic was a key catalyst for driving digital financial solutions, especially given the aging population and the need of people to stay, stay isolated. In addition, there is a large labor shortage in Japan, so digitalization is a key element of what the government wants to do. So the way PayPay worked was they partnered with municipal governments, and they drove different campaigns which allowed for adoption of digital payments through cashback and reward coupons. They have run close to 500 campaigns in 3,000 municipalities over the last 2 years. Essentially, through the PayPay app, the municipalities can issue their coupons, any other gift certificates or redemptions or payouts can be done through PayPay. So visitors don't have to, the users don't have to visit in person. You have a bill payment function. So any payments that need to be done for utilities, for taxation, or for other private bodies can be done through PayPay. And the merchants can use the PayPay app to issue coupons to their customers to encourage them and do marketing. Almost 2/3 of all municipalities in Japan had adopted bill payment from PayPay, and PayPay is also driving Support Your Town project with local governments for digital adoption. They did 2 billion transactions in 2020-2021, which is the key first year of the pandemic, and this is almost doubled in the following year. So lessons, even in developed economies, there are significant gaps in digital adoption, which were brought into focus during the pandemic. Public-private partnerships can be quite effective. We've seen a few of the other use cases where they work with the governments in dispersing of funds, but this can also be applied for a variety of different use cases to support the vulnerable segments. And a one-stop shop allows for both sides of the transactions, both vendors and customers, to accelerate their uptake. And we've come to the end of my session through here. I would now hand over to Veeravan Su. He's the Associate Economic Affairs Officer, Financing for Development section of the ESCAP, to take us to the session 2, which is on winning digital financial solutions and enabling environment, combining regulators and digital payment providers. Over to you, Ken.
Hello. Sorry, give me 1 second. Thanks, Mashir. So before we start the panel, I'm just going to give a little bit of context on the panel itself. Let me pin our speakers. So with payments being a critical part of all financial services, it is crucial that barriers to easy and seamless payments are brought down to enable anyone access to payments easily. The COVID-19 pandemic has led to significant impact on retail and merchants alike, with a move towards contactless and digital payments. In this panel, we'll take a deep dive into the evolution of payment solutions in the Asia-Pacific region, while discussing how the regulatory and policy frameworks are evolving to facilitate an enabling environment for the industry. We will also discuss the impact of COVID-19 on regulatory policies in the region for digital onboarding and key considerations for facilitating financial inclusion. This session will also provide an overview of the policy barriers and consumers and payment providers face and the solutions for overcoming these barriers. And lastly, we will also discuss how policymakers have balanced the need for enabling financial inclusion with the need for prudent regulatory oversight. So before I get started, I'll introduce briefly and let each panelist kind of speak a little bit towards what their organization and their firm does. So let me start off with Dr. Vajrakun Chivakanon. He's the Deputy Director of Payment Systems Policy Department for the Bank of Thailand.
Hi, good afternoon, everyone. So I am Vajrakun Chivakanon. My name is quite long, so people call me, or you are welcome to call me VJ. I'm from the Bank of Thailand, Payment System Department. Okay, so Bank of Thailand is the regulator, and come down to my roles, I'm responsible for strategy, payment system strategy, and also payment system data analysis. So this is my key area.
Next, we have Madhu R, co-founder of M2P from India.
Hi, good afternoon, everyone. Great to be here. I'm the co-founder of M2P. We are a fintech infrastructure business which has operations in most parts of across Asia. Looking forward to this conversation. Thank you.
And lastly, we have Brad Jones, CEO and founder of Wave Money in Myanmar.
Hi, thank you very much. Yeah, so I'm the CEO of Wave Money. We're the leading fintech company in Myanmar. And despite the challenges that you'll be aware of in the market, we're still providing services and actually still growing in the market.
Awesome. So to get started, let us do a quick stock taking of how the digital finance and digital payments landscape has changed as a result of the COVID-19 pandemic. So first question will be to Madhu. So how has M2P transformed over the COVID-19 pandemic, and what key changes did your firm make?
Sure. Yeah, I think the COVID has been a big added a big tailwinds to digital payments in general, and we as a business support a lot of fintechs and banks. We are sitting in the middle of 30 plus banks across Asia. Close to 550 fintechs that are getting powered on our platform. And we have seen the adoption grow, month on month, almost by 20-25% volume growth, new customer additions and things like that. One of the good things that have come out is that, the banking ecosystem that have adopted it, and to a large extent in markets like India, where we are headquartered, the regulators have been, overwhelmingly supportive of, new changes and be open to adopting new ways of, let's say, doing KYC, for example, right? We opened up the video KYC as a method, which freed up the, customer onboarding journeys to a large extent, which allowed us to actually, grow rapidly, the fintechs which are on our platform to grow rapidly. And that growth has not slowed down. And we see a lot more new customers getting added vis-a-vis pre-pandemic sort of levels, right? Overwhelmingly, it has been really good. Just to give you a point of reference, between the first wave, the first year after the first wave, our platform grew by 5x. The following year, which is the year closing March 2022, we grew by almost about 4x from that 5x growth. Right? So it's been a phenomenal run over the last 24 to 30 months. And we hope, hope that we are out of the pandemic, but the growth continues to be like what we had in the pandemic.
Thanks. So this is the same question to you, Brad. How has Wave Money transformed over the COVID-19 pandemic, and what key changes did your firm make?
Sure. So Wave traditionally started as an over-the-counter money transfer business. And when we launched the business in 2016, that was really the customer problem we were trying to solve. I think what we saw as the digital infrastructure started to roll out in Myanmar, it became a market that very quickly became dominated by 4G. And also, even though a developing market, around 85% of customers were regular data users and operated on smartphones. So we pivoted the business really in 2018 to being a much more of a app-based business in addition to over-the-counter money transfer, and have really started to drive what we call the WavePay wallet. That was timely for us. As COVID started to hit Myanmar in 2020, we obviously went through periods of lockdowns. We actually found a mass acceleration of merchant activity. So a lot of merchants that we'd actually attempted to get on before onto the platform, now we're very quickly trying to move on to WavePay. So we had to quickly accelerate our onboarding processes. We were doing a lot of disbursements. So we actually, at the very start of COVID, we made a statement that any disbursements for NGOs would be done free of charge, whereas previously we charged a disbursement fee for that. So we actually had all manner of development sector parties come to us actually wanting to have us actually help distribute aid through the country. So that was a very, very successful program. And then, but COVID for us has been really a two-phase sort of period, right? Because we've had the COVID period, which has actually gone for over 2 years, but then we had the political situation and political changes of February last year. So this has been a challenge because there were things including the stoppage of 4G for around 2 months throughout most of the country. That had a massive impact on digital payments, and essentially we went backwards for a period of time. But pleasingly, since that situation's been remedied, we're now
sorry, just 1 second.
period for us, but there have been, sorry, am I back?
Yeah, yes, you are.
Okay, sorry. So yeah, so in summary, it's been a very good period of acceleration for us, but we've had some particular political challenges that we've had to manage as well, in addition to the COVID challenges that have sort of impacted the digital side of things. But we're now back very much into growth and seeing an acceleration again and not just an acceleration. I think what we're seeing is that as digital payments became part of people's day-to-day lives, we're actually now seeing them stick. So we're not seeing people shift back to cash so much. We're seeing people stay in digital payments actually after being exposed to them. So that's very pleasing.
So from the side of a policymaker, Dr. Vajrakun, for the Bank of Thailand, like what changes in internal policy were introduced during COVID-19 to support digital finance and digital payments? Did you see a significant change on the ground as a result?
Right. Well, let me put it this way. As Bank of Thailand, I mean, since we have been continuously promoting digital finance and digital payment in the country, so basically we just kept doing what we have been doing, okay, through the promoting of interoperable infrastructure, innovation, inclusion, immunity, and information. So all of these things that we already, put in place. So during the COVID-19 pandemic, when people and business, we have to move online, right? They have to move away from a physical onto the online platform. So the digital payment were already there. So basically, to answer these questions, right, we just kept doing what we have been doing. But to answer your question, to the latter question about what significant change in the country during the COVID-19 pandemic, I would say that the big changes, significant changes, is the government project. The government project of the government e-wallet, and they fund the money through the government e-wallet. You can maybe you're familiar with 50-50% co-payment project, or We Travel Together project, where the government subsidize part of your expenses into the government wallet. Okay, so for that, you see that a lot of Thai people change their behavior. So from cash, they move their behavior to the mobile devices, for example, like this government e-wallet. Right, so especially for the certain group of people that we think it's very difficult to change their behavior. For example, like older generation or like street food vendors, for example, it's very difficult to change their behavior. But because of this program, government program, within a short period of time, they change their behavior. And this is a very big change for our country.
Awesome. In that similar vein, this question's for Madhu. So India has also made significant progress in standardizing payment systems. So how have government policies, especially with regard to the unified payments interface, shaped the digital payments landscape that you've seen from your experience?
Yeah, I think the important sort of aspect in that is to sort of really go back in time and look at what India has built out over the last decade or so, starting with Aadhaar, which is an identity layer, which kind of paved way for banking access because the KYC processes got simplified, and that led to a lot of adoption of people coming into mainstream banking, right? So that was the primary sort of trigger, and then you had the second wave, which with UPI, there was a demonetization that India went through in 2016. Around the same time, demonetization, the whole UPI product was launched. UPI is a real-time for the uninitiated. It's a real-time account-to-account transfer using mobile, and it also can be sort of embedded into third-party sort of applications. So you had a structure where the bank continued to offer or be the custodian of customers' money. So there was no wallet, there was no need for you to create a separate mobile application and things like that, but really riding on the existing banking rails and providing a real-time settlement into the bank account instantly. So therefore it's a first of its kind globally, where you had third parties that were building out consumer journeys on top of UPI that really powered it up. So the framework was very important, and it was the banks controlled and managed what they were good at, which is managing the customer's money, doing KYC and reporting and all of that, while we had B2C companies that came in and really powered up the whole distribution, and use cases got expanded. And more importantly, in a very price sensitive market like India, it was made as zero cost. So therefore there is no money to be made on UPI in itself, but practically every use case, even if it is, let's say, 2 cents of payment that I have to make, people today use the mobile and the UPI sort of rails to do that, right? Naturally, that led to explosive growth. We are at a $1 trillion volume trajectory, as we speak, which has got grown in the last 4 or 5 years. And the fact that there are more use cases that have got created also points to how well a carefully crafted policy could drive adoption of digital payments, which is creating what we call as second order effects with respect to how innovation can happen. So now using that transaction data at a small merchant was completely in cash a few years ago. Lenders are now trying to see if there is value in providing a line of credit to that merchant, right? So innovation is happening because the core payment product itself doesn't make money. You have to really figure out what more can we do with the merchant to really extract value from that relationship, right? So therefore, the second order effect of that, UPI is now starting to sort of be visible, where businesses are now building use cases on top of UPI to find ways to make money on that transaction, thereby driving innovation. There are also big application use cases on public market, like IPO financing can happen through UPI. So you can actually block the money. It's like almost like a standing instruction on allocation. The money will sort of move to your account. That triggered new people to actually come into primary markets for the first time in the last 12 or 18 months. So there's a lot of new avenues that have got created because there is a resilient system that is scaled, and and the network effect, as the payments world calls it, is already sort of visible. Recently, the regulator also allowed credit card products to be linked in the recent policy guideline to UPI, which can power up the whole credit side of the equation, hopefully in the next few years.
That's wonderful to hear. And we see significant progress in Myanmar as well. We understand the central bank is making progress to introduce QR codes to facilitate payments even further. So Brad, from your perspective, what potential effects do you think this has on the digital economy for Myanmar?
I think this has been one of the interesting things that's come out of the last 12 months. So in addition to some of the issues we had, including the 4G block and the rest of it, there was challenges around a banking crisis, a cash crisis. So we had an issue where basically cash became very scarce in the market for a period of time. It's improving somewhat now, but what it meant was that it became another accelerator of digital payments. So we've had COVID plus these issues, which have sort of become dual accelerators. What we've actually seen is, and we've recently started rolling out an extensive merchant network of QR code merchants. We had avoided that for some time, and I think partly because we'd seen the experience of QR code merchants in some adjacent markets like India, where some players had actually rolled out very, very extensive networks, spent a lot of money on incentives, and then when the incentives were removed, customers basically didn't come back. So we sort of chose our moment, which was really in the last 6 to 9 months to really roll out a QR code network. And the reason why is we're actually seeing now customers are using QR codes without necessarily needing any incentive at all. So I think the digitization that's come from COVID, some of the challenges around the cash availability in the market has really given people a reason to use QR code for payments. So I think the central bank has certainly got behind this, and they're looking to standardize a QR code. So they've now developed the Myanmar QR, which has been based, from what I understand, VJ can probably provide more information, but I think they've collaborated with regulators such as the Bank of Thailand. They've collaborated with regulators, including MAS, and they've looked at QR code standards in
I think Brad's line.
Oh, you're back.
Sorry, I apologize for my unstable internet connection today. Yeah, so we're going to see what this is going to drive, I think, is interoperability between banks, interoperability between mobile money providers, and hopefully that will actually accelerate digitization in the country. So I think this is definitely some policy change we're seeing coming out of the central bank, which I think is going to be to take really the formative work that's been done on digitization and actually take it to the next stage.
Awesome. So shifting gears a little bit, we see a lot of focus on digital payments for consumer-facing transactions. However, B2B payments still play a critical role in facilitating business in Asia Pacific. So this is to Dr. Bashrakun. How has the Bank of Thailand promoted digital payments for B2B transactions, and what have been some of the challenges here?
Right. So I believe that you are all familiar with the Prompt Pay, which is the fastest payment in Thailand, right? That was the game changer, the big game changer for Thai payment system. So from the beginning of the introduction of the Prompt Pay, we see a lot of changes in Thai people behavior, payment behavior. So instead of using cash, they are now get used to using mobile banking or QR code payments. So this was the big game changer for Thai people. So now it's time for the Bank of Thailand and relevant parties to create the new game changer for business sector. Okay, so we are on the process of build a new financial and payment infrastructure for business. We call it PromptBits. Okay, so that's the same family with the Prompt Pay, so Prompt Pay and PromptBits. This is to facilitate the business sector to transform themselves from physical to digital in digital business process. So the infrastructure itself is not just a payment. So it's the combination of the payment system with the trade system and also the supply chain finance system. So basically, this is the straight to processing for the business sector. So instead of, for example, like you have to submit your invoice or PO, now you can start with that process whether electronically or digitally, and and then it's linked with the payment, and you can also link that with supply chain finance. For example, you can use that invoice and link it to the supply chain finance. Okay, so I like to give you one example to see what this is about, right? Previously, when you, this is in case of Thailand, of course, when you receive money, for example, for your goods and services, for example, like you receive 1 million baht. You don't know what is that for. You have to call and check the buyer to see, okay, this is 1 million baht is for which invoices? Maybe that invoice number 1, number 2, and partial of number 3, for example. Then you have to call and check to reconcile. But with this new system, new infrastructure, the payment will come with the information. Okay, so 1 million baht will come with the number of invoices. So once you receive 1 million baht, you already know instantly that 1 million baht is for the payment of invoice number 1, number 2, number 3, and 50% of number 4, for example. So that helps a lot of business to handle with this pain point in the business about the reconcile. And another pain point is that once you make a payment, you have to wait, or you have to find some way to get the receipt or e-receipt from the seller. This process will be done automatically with this new infrastructure. For example, like once you get the payment, you have a SLA, for example, like payment date +1. From that, you can get the e-receipt automatically. So these 2 pain points will be done, will be deal with this new infrastructure. So that's the plan for Thailand to move from B2C to B2B.
Awesome. That is something we are looking forward to in the future. So we've covered a little bit about how the private and public sectors can work together to promote a digital finance ecosystem. But let's talk a little bit about challenges on the ground. So what do you see? So this is to Madhu. What do you see as some of the key barriers for customers and/or for merchants? And how do you see the private sector filling in these gaps?
Yeah, I think the big part, in most emerging markets, there are 2 or 3 types of challenges that we see with respect to adoption, right? One is the entire awareness, challenge. Why should I be using digital payments? Will I come in the tax net if I start accepting payments digitally? Things that are very, for the digital primitives, as we call it. How do you get them to the financial sort of mainstream and keep, driving that adoption is a big part of the challenge, where a lot of, dollars around training and educating, the merchants to adopt this and, derive value out of it is sort of going in, right? That where I feel that, there can be public-private partnership, create some kind of a awareness sort of, pool of capital, which will, drive larger sort of efficiency in terms of how this messaging can go out. That's something that today, is being done largely by private enterprise in their own sort of, manner. That's the first sort of challenge. The second is with the advent of, real-time payments, and the success that, if you have to take a leaf out of the success that UPI has had in India, we need a new economic structure around adopting payments in general, right? So that there are more people who come in. Think of today, the alternative to the digital payment is cash, where there is, the cost of that managing that cash is only borne by the government and the central bank. So there has to be a mechanism that, and a reset in terms of the economic model around payment that needs to happen, at least for the small ticket transactions and low value sort of transactions, right? There is a lot of talk and murmur about it, but it needs to be driven, across all players in the ecosystem. Very clearly, India has shown the path with respect to, a zero MDR regime, driving the, sort of adoption, significantly, right? It's not been a linear growth; it's been an exponential growth. And the third and the last sort of challenge that we see is around something to sort of allude to, Vijay's point earlier, is around how do you kind of cross-pollinate new products? So if there are payment, people who are coming for payments, the same SME is also looking for loans. How do you actually manufacture new products that will improve the livelihood and improve the efficiency of that business? Is something that we need more private participation to sort of drive that up. I think this is not an either or. All three have to sort of go together. So if again going back to the UPI example, because there was no MDR, people had to innovate on lending products or providing bookkeeping products or providing alternate tools for the merchant to run their business more efficiently. So therefore, the business that was providing payments started seeing new lines of revenue, which was it created a win-win for the entire ecosystem, right? So therefore, there is more private enterprise that can do it. I think a policy level intervention to sort of fuel that will be very welcoming from the private enterprises as well.
So this is back to Dr. Bhatrakun as well. So Madhu has discussed some of the key barriers just now. What were the other gaps in digital payments adoption pre-COVID? And you've alluded to that earlier about people being hesitant to join digital payment platforms. Have those gaps persisted through the pandemic? I believe you've also mentioned that they really have gone away, but really, how were they overcome? And what was the Bank of Thailand and the government's role in promoting people to join these platforms?
Right. Let me say, from statistics and survey, infrastructure is not a problem for digital payment adoption in Thailand. So we have a survey says that 95% of Thai people already have smartphone and 91% of them already have internet access. So in terms of infrastructure, this is not a problem. Oh, okay. We also have like 7.2 million QR code acceptance. We almost have like 900,000 EDC machines around the country. So on the infrastructures wise, this is not a problem. So I think in terms of adoption, I always believe that it's all come to the financial literacy. Okay, so in the past, before the COVID, or let's say pre-COVID pandemic, we put a lot of effort in giving people education, financial literacy. We create a lot of program to educate or literate people how to use digital payments wisely. Okay, but I always believe that helps, but it takes time to change people's behavior. Especially, as I said, like some certain group of people, older generation, or people with no confidence or with no knowledge in technology. But after the COVID-19 experience, I changed. I mean, that's proved me wrong that literacy itself is not just an important issue. Incentive is the key issue. Yeah. So from the experience of the government e-wallet, when government subsidize money through the government e-wallet, we see people trying to find or try to literate themselves. Okay, we see grandma, grandpa try to, learn how to use the mobile device, how to use to make the payment via the government e-wallet. So now, if you come to Thailand, you see the experience that you see older generation use the government e-wallet faster than myself or my generation. So that's the big surprise to me, and that changed my thought that literacy is just the only way to create adoption. But the right incentive or the proper incentive will also change the behavior of the payment behavior. So that's the experience from Thailand. But now let's come to the point that how can we keep that momentum? Because again, from the survey, it says that if the government stop the subsidy campaign, they will come back. 65% of them says they will come back to use cash again. So we don't want to see that happen, because once you have the fireworks, once you have this momentum, you have to keep that momentum alive, right? So now is one of the objectives of the Bank of Thailand, how to keep that momentum. So for example, like we try to talk to the government, how to expand the uses of the government e-wallet, for example, because now at the moment, the government e-wallet and the mobile devices or mobile banking is not interoperable. Okay, for example, like if you go to the vendor, right, you cannot use the mobile device or mobile banking to scan the QR payment of the government e-wallet. So it's not interoperable. So that's one of the issues that we try to keep that momentum.
Great. So shifting to a neighboring country for Brad, have there been specific challenges that have persisted from before the pandemic? And in your perspective, how do you see the private sector in Myanmar addressing those needs and those gaps?
Yeah, I think I would agree with Vijay. I think digital literacy, financial literacy, I think for us, we would have seen them as the key barriers to e-wallet adoption. But I think what we've seen is an acceleration into that, and heavy use by sectors and segments that we wouldn't otherwise have actually thought would be heavy users. So I think, you only need to look at the success of apps like Facebook and Viber and Myanmar, where Facebook are essentially saturated into the entire adult population. So I think, the Myanmar people are able to navigate apps, they're able to download apps, they're able to basically find their way through using those apps. And I think, I wouldn't say digital and financial literacy have proven to be significant challenges in terms of the way we've seen adoption. And I've seen people from, we've been doing NGO payments for a very long time. I've seen internally displaced people in the far north of the country using electronic wallets, e-wallets. I've seen factory workers on the outskirts of Yangon using e-wallets to send money home. So it's not necessarily, we're definitely seeing heavy e-wallet adoption amongst the middle class and the more wealthy. And I think basically because e-wallets have become a far more useful utility, and particularly if it can be funded by a bank account, it's become a very useful utility in Myanmar. But we haven't sort of seen the digital literacy or financial literacy challenges that have come about. The challenges we've had here in the last 2 years, as I said, has not been an adoption challenge. I think it's been a macroeconomic challenge. So the economy in Myanmar basically has shrunk by about 20% in the last 12 months. The World Bank just announced that they're not going to give a GDP forecast for this year, because it's too difficult for them to actually do so. So I think, we've seen people definitely have less money in the economy. So I think, whilst people are comfortable using e-wallets and there's few barriers to doing so, the cost of data has increased dramatically in Myanmar. So that's made it more expensive to use them. And I think, we've seen sectors like the garment sector, construction sector, very, very heavily impacted, and that's really had an impact, I think, on the usage of just on use cases like sending money, because people have had less money to actually send. We're looking to work with the regulator here to basically increase the use cases for things like international remittance. We see a significant opportunity of international remittance from Thailand, for example, into e-wallets in Myanmar. With the amount of migrants in working in Thailand and the remittance flow back across the border, we see a significant opportunity for that. So I think, I think our challenges are less about adoption and probably more macro in Myanmar at the moment, and particularly sort of linked into the economy.
Thanks. So I think this is really, we're shifting to kind of the last topic, and this is probably the most popular topic that we've received questions on. It'll be more about balancing the role of policymakers and how regulations play a role and how you balance the need for innovation with data privacy concerns, with a lot of the other concerns that are arising lately. So I'll start with Dr. Vajrakun. Let's discuss the role of policymakers in promoting a healthy digital finance ecosystem. How have policymakers, especially in Thailand, balanced the need for enabling financial inclusion with the need for regulatory oversight?
Right. When we talk about financial inclusion, there's many ways to promote financial inclusion. But let me scope it down to the innovation. We can create innovation to promote financial inclusion. Okay. So when we focus down to the innovation, this is the most challenging task of Bank of Thailand, and also I believe that most challenging task for the central bank around the world to balance innovation and stability. This is a more challenging task, right? Let me give an analogy in this way. This is an analogy from my previous governor of Bank of Thailand. They said like the central bank is more like you take away the glass of wine from the people in the party. Of course, they will hate us, but this is our role to take care of all of the people, not just for in the party, but also the people outside the party. Okay, if you drink too much, it might be the case that you will go out and then cause accident in the outside world, right? So this is the role of the central bank to manage. Okay, you can have a party, you can have fun, you can enjoy your innovation, but at the same time, we will be the one that take out the glass of wine from your hands because we think that this is already too much and will cause, risk in the society. So that's why most of the time when we talk about innovation, when we talk about stability, they're always a metaphor to us like central bank is a dinosaur. They don't understand the technology, they don't understand innovation, they don't understand what's going on in the society. For example, when we come to the new world of digital, we talk about like digital asset, digital currency, central bank digital currency, for example, in this way. We take a lot of glass of wine from their hands and they said, this is the dinosaur, right? So what we try to make this balance better is that we, not only Bank of Thailand and many central banks around the world, we try to create atmosphere or environment for the innovation to be innovated. For example, we have Sandbox, we have innovation lab that you can test, you can have fun, you can have party in that room, whatever you want. Okay, and then we see, we observe from the outside, and if we think this is already, it's already safe, or you can show or you can prove that you have a measurement to mitigate all of the risks from your glasses of wine, then it's fine. Then you can go out from that sandbox or that innovation lab and enjoy the real world in the society. So this is the most challenging part. And then at the central bank, as a regulator, we try to accommodate or facilitate more innovation.
Great. So I'll shift to Madhu. For India, especially in India, what do you see the role of policymakers to be to balance the need for enabling financial inclusion, particularly for MSMEs and rapid innovation, with the need for regulatory oversight, especially as we hear more and more news of hacking, of data privacy concerns as well?
Sorry. Yeah, I think so. There are two parts to this. One is there is a larger effort from a public policy and a public good standpoint. In terms of how do you enable access to this data for MSME lending, as an example, that is being driven by a framework called account aggregator, which is essentially a policy-driven approach to data being shared. So if you are having a bank account with a particular bank, you're an MSME, you have somebody who's ready to offer, invoice discounting as a product. How do you port that data from your bank to this MSME lender? There has been a framework that has been created. There are licenses that have been given out for these participating entities to operate. So there's a lot that has gone in the last few years to facilitate access to finance in a meaningful way, leveraging data platforms. We believe that at least the general sort of new view on the street is that is the next big thing after UPI that could potentially change the way financing is done for MSMEs. And there is a lot of excitement around this actually going really large, right? So that's the first part. But with outside of being regulated or not, or if there is a policy that is being driven or not, technology first have a responsibility to be to ensure that their customer data is protected and handled well, both when it is transported as well as when it is stored. So many of the companies that we interact with, fintechs and businesses that are adjacent to fintechs have demonstrated strong at least the interest and need to ensure that their customer data and data in general is protected, and because that can mean that loss of trust if something untoward happens to their data. There's a lot more work that needs to be done from overall governing regulation and the laws that India is going through a new Privacy Policy Act. Hopefully, once it is tabled and passed by the Parliament, it will give a lot more overarching, constitutional sort of guarantees around what data can be shared, how it can be shared, and what right the customers have. That's the only piece that is missing in the jigsaw with respect to how somebody can be in control of their data. But I think directionally, the whole account aggregator will pave way for larger financial access to MSMEs in India.
And lastly, this is for Brad. Is there anything else you'd like to add regarding the role of policymakers enabling financial inclusion and MSMEs?
Yeah, I think I might just talk a bit generically more so than specifically, but I think, I mean, if I look at this country now, if I look at some of the challenges that I see going forward, I mean, we have a country where about 30% of the population doesn't have national identity cards. So how do we bring them into the financial system so that they can still get access to even the simple methods of storing money and sending money cheaply and easily without actually having access to a national identity card? That's a significant financial inclusion policy challenge. Secondly, as the MFI sector and the banking sector is restructuring its significant problems in NPLs and the rest of it because of the macroeconomic challenges, we're starting to see a significant shift of people moving to money lenders, of interest rates of 20 to 30% per month. So, we're seeing an incredible amount of indebtedness basically starting to come into the market because of a lack of formal lending sort of instruments that are available there. Insurance, there was a lot of work being done on insurance, liberalization in the insurance industry, but we're yet to see micro insurance products coming down to really bring people into products that are going to actually help protect them. So I would say in Myanmar, we're still dealing very much and probably at a crisis level in many ways, driven by the COVID and by the political situation from last year. And I think some of these large challenges are not going away. In fact, I think they're actually getting bigger, and the number of people who are sort of moving into poverty, not just in Myanmar, but in the emerging world, developing world, has accelerated greatly through COVID. So I think, I think there has to be a dialogue between fintech providers and policymakers, and there has to be sort of innovative solutions start to be developed to address some of these really significant issues. Because I think, I actually thought, to be honest, before COVID, that the mobile money fintech sector was well on the way to solving a lot of these problems. 2 years forward, we're actually back to a poverty sort of situation that was the same as it was probably 10 plus years ago. So I think the problem has not gone away. In fact, it's only got worse in the last couple of years in the developing world. So fintech really has to be able to stand up and work with policymakers to develop those solutions to solve these problems.
Thanks. So those are the end of our prepared questions and answers. There has been one question submitted through the Q&A function. I'll direct this towards Dr. Vajrakun. So this question's from Amit Garg. The ease of payments through interoperability is a common success factor in many of the examples shared, particularly from session 1. However, only a handful of countries in Asia Pacific have real-time retail payment platforms. So Thailand happens to be one of them. Are there lessons from such situations that can be shared, especially how small businesses or export chains deal with payment settlement transactions?
Again, from my perspective, once we have the faster payment in our country, it changed, as I told you earlier in my second question, I guess, it changed Thai behavior in terms of payment behavior, because it's safe, because it's convenient, and because it's 24/7. So for that, it changed a lot of behavior. And from that platform, it can be a platform for another innovation. For example, like we have QR code payment, and that is also on top of that fast payment infrastructure. We have like e-donation, for example. I mean, and many more innovation on top of the infrastructure. And I think this is I told you earlier, it's a game changer for our country. And again, we now using that platform or that infrastructure to link with other countries. We have Prompt Pay now, which is the first, the first linkage, the first in the world that link the faster payment of 2 countries, from Thailand into Singapore. So now you can transfer money from Thailand to Singapore using just mobile number. So that is the example of the usefulness of the faster payment in infrastructure. And I think that is the beginning. Once you have the backbone, then it comes up with another innovation on top of that.
The next question is a little bit about data privacy, both practices and from regulations. So I'll open this up to all our panelists if you have any comments that you'd like to add. So the question basically is, how do we guarantee that personal data is safe and not transferred to third parties? As there have been cases in certain countries where fintech companies have ended up monetizing those data instead. So I'll kind of open up this question if anyone wants to start off with it.
Okay, let's start with me. Okay, in case of Thailand, we have the PDPA, like Privacy Data Protection Act, right? So all of the concern about the privacy data is already written in the act. So the financial sector and I mean, especially financial sector actually is applying to all sectors, but especially financial sector, it will be very focused on the data privacy. So all of the financial sectors, banking, insurance, stock market, money market, will have to imply with a PDPA that will already launch in June 1st. Okay, so for that act, we'll make sure that all of the data or privacy data is protected.
Madhu, Brad, do you have anything you want to add on to that regarding practices maybe that your firm or organization has implemented?
I think the first and foremost aspect is you've got to follow the law of the country. So I think that's the key basis, right? So I think in certain markets, I think they're a little less developed than they would be, say, in Thailand. But I think first and foremost, you know, if I look at Myanmar, for example, we have a financial institution law which actually deals with some of this aspect, and that's something we have to, you know, to continue to have our license to operate, we need to basically adhere to and ensure we comply with. That's the only point I'd make.
Perfect. And that brings us to the conclusion, and we are right on time. So before we go, I'd like to thank Dr. Vachharaku, Mazu, and Brad. This concludes the discussion under session 2. I will now pass it along to Professor Douglas Arner, Carey Holdings Professor in Law and RGC Senior Fellow in Digital Finance and Sustainable Development for session 3. Please give us maybe 1 or 2 minutes so we can rearrange the screen. Thank you.
Thank you.
Hello, everyone. And let me just see if we can get the rest of the panelists for our second session today up on the video. As Win said, my name is Douglas Arner. I'm a professor at the University of Hong Kong, working in the area of finance, regulation, and technology. And I wanted to particularly thank ESCAP and Win, Mushir, and Alberto for all of the work that has gone into putting today's seminar together. In this second panel, we're going to be looking at digital payments infrastructure and lessons learned for adoption. And I'm joined, I think, by another outstanding panel. Mohammed Rizwan Aziz, Country Director and Head of ASEAN for World Remit Malaysia. Monica Jasuge, Head of Money Management at GoTo. Pravina Rai, COO of the National Payments Corporation of India, and Joel Yarbrough, I saw Joel earlier, MD at Rapid Ventures, and there's Joel, I can see now, and VP for Asia Pacific. You know, in the last session, we were talking a bit more about sort of technology and inclusion more generally. But in this session, we're going to focus in on this idea of payments infrastructure and to a certain extent, to the possible that we can, on the SME and MSME side. And, you know, it's something that in 2018, I worked with a team with the Alliance for Financial Inclusion to develop a strategy to help them use financial technology to support financial inclusion. And basically, that strategy focused on 4 pieces. The first was digital inclusion. The second was interoperable electronic payments. The third was universal account or digital wallet or mobile money access. And the fourth was digital identity systems. And essentially what we found is that in the context of individuals, it was that particular combination which was tremendously powerful, not only from the standpoint of individual financial inclusion, but also from the standpoint of really reducing the costs of customer acquisition and enabling a wide variety of business models and innovations for broader development. And I think since that time, my team has spent a lot of time actually analyzing data, trying to figure out if we look at the different factors in terms of what actually makes the most difference from the standpoint of both financial inclusion and really across the United Nations Sustainable Development Goals, it's interesting that the single most powerful factor that we found is access to electronic payments. It's not mobile inclusion, which kind of, you think of the old Gates quotes about the power of the mobile phone, which is true. If you think about, digital ID, if you think about accounts, but really it was actually access to electronic payments that seems to have the greatest impact. And perhaps it's because it's the electronic payments that actually enable you to do all sorts of different things, which are potentially transformative both for the individual as well as businesses and the country. And I think if we look at the past 2.5 years now of COVID, we've seen a tremendous amount of development in digital payments. And really what I'd like to dig into is this idea of, first, what can governments do to support digital inclusion, not just of individuals, but also of SMEs in particular, as well as financial institutions and governments, this idea of digital inclusion broadly. And second, what can they do from the standpoint of payments? We'll then move on from there to talk about this idea of interoperability, what it means and what you can do. But maybe what I'll do is I'll start by asking each of my panelists to introduce themselves and to talk a little bit about their organization and what that organization's role in the context of particularly digital payments inclusion is. So maybe I'll pass the floor first to Ridwan.
Thank you, Douglas, for that comprehensive introduction of the topic today on breaking down barriers to payment. My name is Muhammad Ridwan Abdul Aziz. I'm the country director for World Remit Malaysia, as well as the head of business development for ASEAN Send business for World Remit. A little bit about myself. I'm a regulator turned banker turned entrepreneurs, and that has taken me about 25 years to do that. I'm based in KL at this point of time, but I used to be in many places in Asia Pacific, especially. With that, I'm also the board advisors for the Fintech Association of Malaysia since 2016. I was the president for 2 terms, and then now I'm one of the board advisors for Fintech Association. So why I'm bringing that up is because there's a lot of engagement that I do with the financial regulators in Malaysia. And uniquely in Malaysia, we have at least 2 financial regulators, the central bank, as well as on the capital market, we have the Securities Commission. And then there's also a ministry that look after a localized kind of personal finance that they also regulate, but outside of these 2 regulators that I mentioned earlier. And it's really interesting because, as Doug said, for the last 2.5 years during the pandemic, especially, there's a lot of innovation from the industry that has happened. But I observed there's also a lot of catching up that some of my colleague or ex-colleague in the regulatory side are also trying to understand. And there's also some of these gaps that we are trying to facilitate for the regulators to, I'm not saying catch up, but try to balance as per how we heard just now in the previous session about balancing the proportionality between the risk that they want to take and the development that they're going to allow based on the development, particularly in fintech. So that's what I do. And just slightly before I end, World Remit basically is a company that's based in London. Started about 12 years ago. We've built it up to become a specialist in terms of international money remittance services, purely digital, no cash taken. And we have about 1,000 employees all over the world, licensed in about 50 countries, and we send money globally to all over the place from the world. So that's a little bit about myself and where I'm attached with. Thank you very much.
Thanks for that, Ridwan. And I think definitely we'll come back in particular to this idea of some of the things that might be possible on the cross-border payments and remittances standpoint, and particularly from the developing country side. I think this is in some ways at least as important as the domestic payments. Let me ask Pravina to say a few words about herself and the organization.
Hi, it's lovely to be here. I'm Pravina Rai. I work as the Chief Operating Officer for Npci. So with this, I manage the business, products, delivery of operations and technology. Prior to joining Npci, where I've been here for the last 3.5 years, I was a career banker, so worked for about 20 years in banks, with long stints in both Citibank as well as HSBC, of which 5 years was in Hong Kong, where I managed payments for Asia. So I would say that really formed up my position, if I were to say it, in the payments industry. So when I came back to India, I was able to join Npci. I also have the good fortune to be a co-chair in the Payments Council of India. And I was one of the founding members of the Fintech Association of Hong Kong. So with this background, let me move to Npci. Npci, National Payments Corporation of India, as the name suggests, was established with the sole purpose of driving innovation in payments in India. And this was about 11 years back. This is set up under the aegis of the Reserve Bank of India as a not-for-profit institution, a public good, where the initial promoters and the current investors all come from the payment fraternity. So primarily banks, but we also now, given the high impact of non-banks in the payment sector, non-banks also participate as investors in Npci. So the focus of the organization is as a public good. It's a self-sustaining organization where revenues really go into reinvestment in innovation and infrastructure for payments. And we're very happy to be at the center of driving digital payments for India. The mandate is really to innovate on payments, make it highly inclusive. And our sort of stated vision is to have access to every Indian to digital payments. I think we're still some way from being there, but good progress has been made so far. So that would be a brief introduction of myself and Npci.
Thanks for that. And I think India has really been one of the major sort of really success stories and models in this area of use of infrastructure strategies from the standpoint of digitization. So great to have you. Monica, over to you.
Thank you so much. I'm Monica D'Souza. I'm heading money management for GoTo Financial. And as the word says, GoTo, so go far and go very far together. That's the motto of our company, which is Gojek and Tokopedia joining forces together to really help further the digital ecosystem in all of Indonesia. So Indonesia, from that perspective, is a very unique country. And the GoTo ecosystem basically provides all kinds of services ranging from on-demand delivery, of course, e-commerce, payments, financial services. So it's like a whole ecosystem ensuring the progress of every single Indonesian with services that they want, they need, and they anticipate in the future to be able to really help them in not just digital inclusion, but really furthering their digital progress all along. And why this is really special is that when you think about the people in South Asia and Southeast Asia, since Pravina has already touched on that, just wanted to bring focus to the fact that we have the most digitally advanced young populations in the world. The reason being, of course, there are a lot of younger people, especially sub 25, who are actually mobile first. And when you provide services to them, you actually need to provide it from the lens of what they will use, because they are not the consumers of tomorrow. They are our consumers of today. And that's exactly what the focus is as far as GoTo Financial is concerned. Previously, I was in Combiga, which is a Tech Mahindra company. And again, there, I was working on mobile money. And as the leaders of mobile money all across the globe, really, they have worked on creating opportunities for both consumers and merchants to actually not stop using cash, but to use digital money as a means of being able to earn a livelihood and actually prevent crime. And we all know the success of mobile money all across the world and how it's actually helped the people who are digitally illiterate, but still to be able to use digital payments and become financially literate enough to be able to own businesses which actually operate on mobile money. And that's a case study by itself. Previous to that, I've worked in MasterCard in India and South Asia, and previous to that in PayPal. I am not going to say that the digital inclusion journey is something that I've been part of for almost a decade. I'll just say this, that I've been part of the digital payments explosion and how it's actually helped first the top of the pyramid, but now you're actually seeing the ripple effects of going to the middle and the bottom of the pyramid, having seen all sides. So very happy to be here and honored. Thank you.
Thanks for that, Monica. And I think Indonesia is actually one of the more interesting cases because it's actually an archipelago of thousands of islands, which means that technology offers very special opportunities to address challenges that have been really serious from the standpoint of logistics. So thanks for that. Joel, over to you.
Hey, Doug, thanks for having me as well. So Joel Yarbrough, I work at Rapid. I lead Asia Pacific. And as you said, I also am the MD for our venture arm globally. And I've had the chance to work, I think, with a lot of these organizations over the last 10, 12 years in a variety of previous roles. You know, like Monica, I used to be at PayPal as we were building out our global payment network around the world, and then stumbling across how we could potentially face off in India, and had a chance to work with Npci about 10 years ago. Thinking through how some of those things might play out. I was at Grab as we moved from pure transportation platform to payments, marketplace, and other services. And ultimately what I found in both of those environments was that payments was changing, not just exploding, but changing everywhere around the world and becoming more and more diverse over time. With my old PayPal hat on, we believe the worlds could be basically a two-sided biopoly, right, between us and Alipay. And we'd eat the world. And of course, there's literally zero evidence that that's happening. And in fact, there's 1,000 choices, not 2 choices today. And so if you're sitting at a large global organization trying to handle the hyper-localization of payments around the world, the evolution of innovative organizations like Npci and influence that they've had around the world, or if you're a single merchant trying to move from Myanmar to Thailand, you have to confront a very, very different and complex ecosystem to do either one of those 2 things. So what Rapid we're doing is effectively building a next generation payment network that straddles all of that diversity across the world, and at the same time offers a product layer above it, so that whether you're trying to build the next super app regionally, or you're trying to scale hyperlocal payments globally, or you're just trying to sell stuff across the border, we can help you to do that with a very low level of technical effort, whether it's a no-code solution, you log into our portal and just do stuff, or you have deep APIs and SDKs and want to build them directly into your core platform. We try to reduce those barriers to entry for access around the world. So some of our customers and partners are not what you would consider necessarily facing off on creating access, but others are absolutely creating new microservices and financial services to open up access to small businesses, micro entrepreneurs, first-time entrepreneurs around the world, to bring them into the payments ecosystem and into the economy in a way that each one of these individual innovators have been doing in their home markets. We try to straddle across those markets and make the world available globally.
Thanks for that, Joel. And I think we'll come back to some of those. I think what that shows is we have a panel with a tremendous amount of experience. And what I want to do is ask each of you to spend a few minutes and talk about some of your experiences and some of the lessons for how governments can best assist digital payment development domestically on a cross-border basis. And if we look at the participants of this seminar, the majority are government officials, particularly from developing Asia. And so you have a variety of levels of development, but developing Asia and very much trying to figure out what can they do that would actually make a difference from this standpoint of helping to support digital payments. So Mohammed, over to you first.
Thank you, Doug. I'll try to bring what I've seen and experience and get involved with in Malaysia, and then also add in some of the exercises and experiences that I had with other countries as well, especially in terms of cross-border interoperability that I got involved with. But domestically in Malaysia, I'm sure you noticed that for the mobile money operator in Malaysia, we probably have too many mobile money operators in Malaysia, given the number of population of Malaysia. Malaysia have about 34 million people, but the number of licensees that has been approved by the central bank, there's about 49. That's too many, given the number of operators that has been licensed by the central bank. So what we have been advocating is, first and foremost, is to consolidate all these key stakeholders to make sure that there's a proper optimization in terms of resources, capabilities, as well as suitability in terms of how they want to approach the domestic market. And I think this is where a lot of not just commercial aspect that needs to be considered, but also some of these social implication, and to a certain extent, some political consideration would have to come into our consideration. So that's why I think the role that I played in the Fintech Association of Malaysia is quite crucial, because we come from a very neutral perspective in terms of advising the policymakers on how to tackle not just the commercial aspect, but also in terms of looking at it from a social, political impact that might and needs to be actually addressed. So that is ongoing at this point of time. And we definitely are now working towards coming up with a new framework on how the mobile money as well as payment framework needs to be consolidated. And kudos to our central bank. They actually took the first step in terms of reorganizing themselves to actually address this from inside out, rather than asking the industry to go first. So they have restructured themselves, and then they are looking at it from a very comprehensive view in terms of how digital payment is going to be consolidated and be made more optimized going forward. Having said that, we also highlighted to the policymakers about the suitability and the relevancy of the infrastructure that we have at this point of time. Domestically, yes, I think a lot of people, a lot of businesses are already aware and understood how digital payment actually work. But for cross-border digital payment, this is something that need more G2G kind of interaction. And this is where part of our job at the Fintech Association, and I'm using some of the use cases that I have in World Remit to showcase to the policymakers at the decision level, making the ministers, the Director General of all those ministries to understand the advantage of enhancing the capabilities of the infrastructure. And this actually touches some of the sensitive aspect. I think just now, Monica or Pravina has mentioned that mostly all these infrastructure are relatable or serving the interests of the incumbent financial services providers, probably banks. So what we are pushing for the fintech companies to be also allowed to be connected directly with the infrastructure, so that digital payment can also be facilitated cross-border for either e-wallet or digital remittance, or even aggregators that exist in Malaysia or wanting to come into Malaysia, or wanting to use Malaysia as part of their operational hub, for especially for middle office operators. So this is something that needs to be continuously and regularly updated to the policymakers for them to understand what are the risks, what are the benefit, and what are the consequences, whether intended or unintended, for the infrastructure to be developed further. Because now, as we are speaking at this point of time, the current infrastructure for payment is owned almost majority by the traditional or the incumbent banks in Malaysia. So you can see from an ownership structure perspective, some of them might be resisting all these changes that would need to happen to the infrastructure. And then those wallets, some of the wallets in Malaysia, the digital wallet, are big enough in terms of bringing in value when they are connected to the central payment exchange. In Malaysia, we have PayNet, as well as domestically, we have FPX will soon be changed with a different kind of retail real-time payment platform. But nonetheless, what I'm trying to say is, from the core of the ownership of the infrastructure, it needs to be changed to allow non-bank and the more I think the more modern thinking and forward-looking kind of fintech companies to be also owning, as well as be allowed to for a direct connection. That's one thing that we have been pushing. We've actually got resistance for the last 3 years, but nonetheless, we are trying, and now we are hoping for that to open up. And I think we have seen a collaboration between Malaysia and Thailand, Malaysia, Singapore, Malaysia, and India for that to happen. But unfortunately, it's only for the bank level, but not yet at the fintech level. So this is something that what we are experiencing at this point of time. And it is also the challenges that I'm facing, either as a part of the industry, as well as trying to facilitate changes from the Fintech Association of Malaysia's perspective for the betterment of the entire industry. I'll stop there, and yeah, later we can talk further about other things. Thank you, Doc.
Thanks for that, Mohammed Rizwan. I think several big points here. The first is the role of industry associations, and I think it's something that we've all been involved in, and I think it's something that really is very important in having a group which can interact with regulators. The second, I think, is this idea of a regulatory framework. And if we look internationally, one of the big trends is for central banks to have regulatory authority over not just bank payments, but all payments, and to develop a specific sort of payments regulatory framework. But some recent surveys are showing pretty big disparities between the level in developed countries, where most have powers and regulatory frameworks, and many developing countries central banks still actually lacking direct regulatory authority over non-bank payments, which I think actually slows down some of the processes. And the final point is this idea of infrastructure on the domestic side, but also the international side. And we may come back in this interoperability idea that one aspect of interoperability is actually access to the infrastructure. And probably this infrastructure point takes us straight over to you, Pravina.
So, you know, when you say government, I'm going to look at it with two lenses. One is the entire policy framework, and the other is the regulatory framework. The starting point is certainly the policy framework, and that's where a lot of good work has happened in India. Douglas, you mentioned digital identity as a big enabler, and certainly has been. The Aadhaar system has been at the crux, you know, creating the right foundation over which the entire digital journey of the country has been taking place, including digital payments. And here, I think we are looking at the entire tech stack. So yes, there is digital identity, there is, you know, digital payments, and there is more in play now where the open network for digital commerce, you know, the associated protocols have also been announced. So we're really looking forward to see how that is going to play out. The account aggregator framework has also been in play in a pilot mode and is now scaling up. which is more akin to the way open APIs have worked in other parts of the world. So I think the entire policy framework is opening up in many ways and has been a very critical enabler. But over and above that is also the kind of enabling support system. So if I were to look at CSC centers, which are customer service centers, they have really worked in the assisted model. And what we realize is that, yes, there would be a certain part of the population that's more aware, more savvy, that will be able to move towards the digital user experience fairly quickly. Whereas for a large swath of the population that may not be as literate or as aware, the digital assisted model serves as the initial step towards creating that comfort. And over a period of time, such people then become actual digital users, truly benefiting from the entire digital ecosystem. So that's where, again, the government has played a very important role, and we see the CSC centers as being hubs of assisted digital convenience. On the regulatory side, there has been a lot of progress, referring back to what Mohammed mentioned. I think here there is, of course, the core commercial banking license, but the Reserve Bank of India has also had announced, and now there are banks focused on small finance. There are banks focused on payments, so they're called payments banks, and there are some limitations to how they can operate. But the primary objective is that they innovate in the payment space. And the most recent one would be bringing in prepaid issuers, what we call wallets, mobile wallets, prepaid issuers into the payments ecosystem. And now they are permitted interoperable connectivity. So full KYC PPIs are permitted interoperability on both the card networks as well as on UPI. So I think good progress has been made so far, and more players are coming on board. Of course, full KYC PPI places certain compliance onus on them. Hence, the PPIs or fintechs also take on the responsibilities that today the banks do benefit from. So it cannot be, have the cake and eat it too. So it is the full KYC PPIs who then have this access, because they then take on the burden of that incremental compliance. But some of the really good regulatory enabling mechanisms that we've had in the past would be around eKYC, which is, again, the whole Aadhaar infrastructure has permitted this. And a number of measures that have come in the context of customer protection and, or customer awareness, so that as we are eliminating friction, as we are making payments easier, more convenient, obviously we're making certain parts of the population more vulnerable. And hence it's important to put that control back in the hands of the user as well. And a slew of regulations there, have come in. One of them, for example, is what is called ODR, online dispute resolution. So just like the payment journey itself has really become very, very convenient, very seamless, the dispute resolution journey, if there is an issue with the payment, how quickly is that resolved? Is that digital as well? Can I go to my app and I say, look, I have a problem, and do I get an instantaneous resolution, or is that going to take me days on end for me to call a call center and so on and so forth as a user? So the online dispute resolution is now in force, and we are seeing that ramping up and rolling out in the country. SI, right, standing instructions or mandate-based payments. There's been a lot of angst in the merchant community around this. I think it created some level of disruption. But as we are really moving ahead and setting up a mandate very, very easy, it's important to put that choice back to the user to be able to manage the mandate, to be able to cancel it, to be able to pause it, to be able to change it. And to also be aware, somebody sets it up, forgets it, and then there are debits happening from the account that they realize after a year, and there's no way they're going to be able to chase that up. So providing a notification, a prior notification to the consumer, so that the consumer is aware of the fact that this debit is going to hit their account, because they set the mandate sometime back, and now they've forgotten about it. So these are some of the, again, enabling measures around customer awareness, customer communication, customer protection, putting the control back in the hands of the consumer, which have been, very positive. And I think there are a number of examples like this. But I think these are very important as we move forward in a very fast pace, bringing in consumers and users who've not really been there before to create this balance. In the cross-border side, I think, for example, with Singapore, the Reserve Bank of India, along with the MAS of Singapore, have actually come together, and they've announced the integration of UPI from India with the FAST system in Singapore, so that actually these rails get connected at the country level, at the common infrastructure level. And the way this will work is that a QR in Singapore, a user from India can go to Singapore, scan that QR, and the mapping between the two QR standards is something that Npci takes care of. So it becomes enablement at the central level by which this transaction can hence be facilitated very seamlessly without any change in experience. And I think we are going to see many more of these kind of examples come in, where both the government and the regulator, the central bank, play a very critical role in bringing these, not just a solution, but bringing the entire countries in agreement with how these mechanisms will work.
Thanks, Pravina. I think some really huge points there. The first is the importance, or at least the utility, of having a comprehensive strategy in mind for how you think about the sort of full stack of the different pieces: ID systems, accounts, payments, data. The second is really this idea of the regulatory framework. The third, and I think this really came out of the first panel as well, is the idea of not just focusing on the digital inclusion side, the idea of getting mobile phones to everyone, but actually from the standpoint of digital and financial literacy, that many of the issues that actually come out at an early stage are because people not only are new to digital, but also new to finance at the same time. And I think finally, from the standpoint of this idea of cross-border, the idea of the QR code in particular, and how one can use systems to link domestic infrastructure to reduce frictions on a cross-border basis. And I think that probably takes us to Monica.
So I think Pravina has covered a lot in terms of what is happening in India, but just want to probably take off from there and add that India in that sense is a trendsetter. Many developing economies are actually taking from the India playbook and trying to develop infrastructures which are basically built on the foundation of being able to provide a digital identity along with infrastructure which actually enables payments to be made to actually help the financially excluded to get into a digital infrastructure. Simply doing this step by step. So in Indonesia as well, the government has been extremely proactive. The central bank has been working to actually roll out a slew of initiatives. So for example, mobile money here is very big in the terms of e-money. And e-money has been used by people across the world, but also here to be able to offer and pay for almost every single service. And also Indonesia in that sense is very different. At the same time, bank-related transfers have existed, but suddenly now it's being disrupted by BI Fast, which is going to enable very fast payments and at very cheap cost, which actually enables and making payments in that sense just available to everyone at prices that make it easy to actually replace it and not use cash anymore. And I think that becomes the prerogative of almost all governments who are also looking at, and obviously central banks who are looking at a slew of initiatives to actually learn from each other, but at the same time, bring in initiatives that are relevant to that particular industry. Now, as far as we are concerned, in Indonesia, looking at obviously a lot of mandates, but more importantly, the rollout of BI Fast, e-money, for example, the limit has been increased. Now people will be able to not only top up, but use this money everywhere. The QR standard, which has become standardized, it's almost now becoming standard practice to be able to offer one single QR that makes it easy for users to know how to use it, and therefore then be using that as their preferred mode of digital payments. And of course, like always, I think there is enough space for everybody to exist, but to take users along the journey with them and not just offer payments and services to the people who are at the top of the pyramid. So I think the conversations have now gone to how can you extend from top to the middle and what are the services that it would take. So developing a mental model and really understanding what consumers lie in which segments and what are their needs, I think is critical. So in terms of digitalization, I think, like you mentioned, Doug, it's not just about providing services, it's also about financial literacy. And what do you enable so that people become financially literate so that not one distrustful transaction happens and users fall off from the digitized economy. In fact, every experience of theirs should help them to evangelize this further. And I think financial inclusion journeys, mapping out, building this into the product and doing more than it takes to actually building the awareness of small steps towards this journey is something that we are interested and we are very focused on, so that the experience, the smallest experience from what you do with your money, and therefore how do you move to spending your money, saving your money, and more importantly, of being able to use your money anywhere, everywhere, to become digital consumers is the journey we are on.
I think that's once again very useful. The first is this point of the influence of the sort of strategic approach and the sort of combination of ID, of interoperability and payments, and your sort of accounts or mobile money systems. And it's interesting, if we look at the Philippines, for instance, the Philippines, universal mobile phone access, but very little payments actually until very recently. And one of the reasons was because you had essentially competing closed ecosystems. A complete lack of interoperability meant that it was actually easier to use Western Union or cash to make payments as opposed to a mobile phone. And I think that mandating of interoperability is often something that, as you've just highlighted in Indonesia, is huge. And finally, this idea of the last mile, and particularly when we think about the ESCAP region, we have this huge difference in countries where you have very high smartphone penetration levels and countries where you may still have fairly high feature phone penetration levels, and what you can do in those very different environments. So over to you, Joel.
I'm not sure I can solve smartphone gap, but speaking, maybe put on my previous Grab hat, maybe Monica has a similar go-to hat. I think what we found is when you give people the opportunity to earn a living, there really wasn't a gap, right? People all have access to smartphones. In reality, they actually all have access to bank accounts as well. Their cousin, their mother, their sister, someone somewhere even has the bank account. It's really about opening up opportunities to earn a living. And if you have valid ways to make a living and to do it profitably, people will absolutely find a way. I mean, even 10, 12 years ago, when I was working in India, we struggled to find people that didn't have 3 phones, right? Whether 2 of them were feature phones and 1 smartphone, whatever. They had phones, they had bank accounts. There was a deep entrepreneurial instinct that just simply needed to be unlocked. I think I'd love to add a couple of points that I think Pravina might have glossed over, that I think are very, very important in the success of what happened in India, that I think also kind of shines a light for other things. And I think also touching on some of the points that Rizwan and Monica made as well. I think as a regulator, which I am not and have never been, I think one thing to really recognize is how much the ball has moved in terms of creating very effective models that can be replicated very, very quickly. Right. So there's a set of models that India looked at 10 years ago for inspiration, and then I would say leapt forward, by a decade. And then the rest of South Asia, the rest of Southeast Asia around the world could say, oh, wow, that was transformational thinking. How do we push that ball a little bit forward, a little bit faster? And that's really what I think we get the benefit of sitting in Southeast Asia, is the dialogue amongst regulators, the dialogue amongst commercial partners, really pushing and prodding and seeing what those missing gaps are. I don't think anybody needs to be in a situation where they have to basically invent the wheel whole cloth at this point. Because if you're thinking about whether it's prepaid instrument licensing, converging with stored value licensing, converging with mobile money and micro banking licensing, it's all been done somewhere before. These pillars that we've talked about in terms of interoperability, digital ID, those are absolutely foundational. Monica brought in the concept of moving the money instantaneously, and let me make the point, 24 hours a day. There are certainly economies for which the banking system shuts down, 12 hours a day, and that's not a great system. But then how do you push that forward? And I think one of the things that India did that was such a big deal, not just was making it cheap, but actually making it free at the low end, right? Having true low value transactions effectively free, whether they happen digitally, whether they happen on a card, because all of a sudden the primary barrier disappears, and all of a sudden you can move an enormous population of payments into the ecosystem very, very quickly. I think we have a Q&A from Sachit on this side, which I think has been addressed, but I'd love to address it directly, which is how do you bring in alternative payment methods like mobile money? The answer is the interoperability framework, right? And whether you get there in 2 steps or 3 steps, the ability for any player to either access the banking rails for instant payments through a bank sponsor, or to access it directly, as Rizwan mentioned. Either one, I would argue, are fine, as long as they have access and the banks are not in a position to prevent access. I think that's more been the issue than the other way around. But in a model where the ecosystem is working together to open up a diversity of players, whether it's 3 or 49 in the Malaysia case, it creates an opportunity for lots of innovation to happen, to lower those barriers to entry, to create the opportunity for different people to create those ways for people to earn money, as I said, in the Grab or the Gojek context. And then all of a sudden that brings everybody into the picture. And then we can really be talking about creating, hundreds of millions of jobs that are digitally enabled, that are smarter jobs, that are location independent, in many ways, that really open up the economy. We haven't touched much on credit. I think we probably touch on that in a little bit, but then the role of fast payment actually reduces the need for credit as well, right? Because I don't need factoring, I don't need small business lines of credit, which most people don't have access to, if I can actually get paid instantaneously in a pseudo cash manner through the digital rails. So I think we're very much on the cusp of being there in most economies, and for economies that don't have all 4 of the pillars between fast money movement, KYC, access to digital data, which borderlines on open banking, et cetera, I think we're close, right? And I think if people take a step back and say, look, how close to the top of the waterline are we really? There's not a lot of work that has to be done in most places to kind of get your nose over the waterline and really create a very vibrant, highly competitive digital economy that can replicate what India has done, can replicate the interoperability that we see in Thailand or Indonesia, et cetera, and really provide a very complete solution to the ecosystem at large. And I think that's what I've found to be so great, having worked in this industry from the time when regulators primarily focused on consumer protection to now when they're very heavily focused on economic development and creating opportunities and being business partners to the ecosystem. It's been a great journey, and to see that level of partnership in so many countries that we operate is very exciting.
Thanks for that, Joel. And I think, once again, some big points. The first is this idea of we now actually have quite a lot of lessons and experience. And so that's one of the values of discussions like this today, is trying to bring some of those out. The second is really this idea of using infrastructure or systems to make particularly low value transactions as seamless and inexpensive, ideally free, as possible, in order to both encourage use, but also to maximize the broad-based benefits. And finally, I think really highlighting once again the huge benefits, not just from the standpoint of the individuals, but actually from the standpoint of competition, innovation, and development in the ecosystem of interoperability. And also, I wanted to thank you for picking up the question, because I was going to pick up that. So what I'll do is I'll give the opportunity to the other panelists if they want to say anything on the question. And the question, which I think is a very good one, is exactly as Joel said. How are we enabling customers who don't have bank accounts or just have alternative payment methods like mobile money to be included in the overall financial systems and enable these customers to make payments? In other words, how do we outreach to that last mile? And maybe what we'll do is we'll reverse back through the panel. So Joel's already had a couple of comments, so I'll flip this to Monica.
I think this question is fairly broad, but I'll say this, that I think the governments have been playing an active role in trying to actually make this happen. So if you have an underlying identity and you have the ability to, say, move money from one place to another at very low cost, you actually don't need a bank. But banks have become also ubiquitous with being available everywhere. There are a lot of countries, including the US, which has looked at a postal bank system. It's not been very successful, but it just underlines the fact that there are multiple avenues wherever there are enough agents available, which is physical touch points available, to have a low-cost bank. I think most markets in Southeast Asia have what we are calling the digital banks innovation, which is basically creating a bank account at the, with your phone. But I think for the mobile money population, it will take a little bit of time as well as effort to actually move them beyond mobile money as a payment to using banks for saving, because they have very little disposable income, which is left after meeting their needs to actually go to the bonds and then go to the savings. So I think when we talk about banks, we have to understand that banks are a way for government institutions to actually help with subsidies, help with dispersals, to also help with an identity of a citizen. But it does not necessarily mean that a person who doesn't have a bank account does not have access to services. And I think we are becoming more and more aware of that fact, which is the reason why when you have a bank account, it just enables dispersals to happen faster, but people can do a lot of things even without having a bank account. So in a nutshell, I would say that a low touch bank account, or a bank account that does not have all the fees and other related charges associated with customers who are not looking for these services, but basic services are now becoming the norm. Digital banks is only probably touching the tip of the iceberg. The larger revolution is actually going to happen when people are able to see the need for financial services beyond what currently is being offered by e-money and others, and governments actually taking a role to be able to help transition these users from e-money to, say, a low-touch bank account to finally a complete bank account, which has all the services provided.
Yeah, I think huge points there. And it's something that I think COVID really illustrated, one, the utility of everybody having a mobile wallet or an account or something that could enable payments or money to get there. And most recently, we've seen this in the context of Shanghai, where you have old people in the context of Shanghai who haven't been able to make payments or buy delivery food because they aren't comfortable using the sorts of apps that we think of as being universally available, which they are, but not everybody necessarily knows how to use them. I think about the US, where mailing checks to people without addresses and bank accounts. Similarly, here in Hong Kong, mailing checks to people, it literally took months and months to mail checks to everyone. If I think of Malaysia, just before COVID hit, an exercise whereby basically the government offered free money to everybody to encourage them to get a wallet, an incredibly powerful tool. So let me pass it to Pravina and then Mohammed Rizwan on that. So Pravina, over to you.
Yeah, there's some very, very powerful points there. And we are talking about mobile money, but I do want to talk about banks. We do have banks in India. If you look at the largest bank, State Bank of India, they have 20,000 branches. And they have branches in very, very remote parts of the country as well. Now, the very latest measure, a policy measure that's come out, is something called digital banking units. So which really provides for every branch to set up a small digital banking unit associated with it, independent of the main branch, but that offers this as an assisted facility. So it really goes back to saying, and there is universal bank accounts in India, the Chandan accounts. So every citizen or every resident of the country has an account, and this digital banking unit becomes one way to facilitate the usage of that account. So this is in play as we speak. The business correspondence, is another category of facilitators that has been enabled by the Reserve Bank. So every bank can establish business correspondents who act like an extension of the bank. So they are like a mobile unit, a mobile branch of the bank that is in the village, very close to, 1 or 2 kilometers from every individual in the country. There is a business correspondent. So it's called a micro ATM, and micro ATM is really a human ATM. It's really this person who carries a small device and is able to give cash, collect cash, make a remittance, and so on and so forth. So again, the assisted model is very powerful there. And as we move away from that segment is where the mobile wallets, the prepaid sort of issuer's instrument comes in. And there again, I think there have been regulations around increasing the cash out facilities, permitting interoperability on the system, in fact, mandating interoperability, which makes this a level playing field for everybody, taking digital services across the length and breadth of the country. So I think these are some of the big examples in play in India, which I think are going to be very big game changers to the question you posed.
Yeah, no, I think that's exactly right. I think this digital banking unit initiative is really interesting and very powerful as well. And it's something that increasingly we're thinking about from a regulatory standpoint. How do you deal with financial institutions, particularly like microfinance institutions or rural financial institutions, which are non-digitized? And as a result of being non-digitized, they actually pose increasing risks from the standpoint of supervision, as well as they're less effective from the standpoint of operations. So how do we encourage digitization? We see this on the financial institution side, but we're also looking at it in a range of aspects from the SME standpoint. How do we get SMEs to digitize? And I think this idea of the assisted model is really huge. We see this across Africa with the agents, but we're also seeing an increasing range of models where basically businesses are going out and they are working with SMEs and farmers to help digitize their business information in order to be able to more easily do business with those farmers or small businesses. But once that digitization process has happened, that actually has tremendous benefits, not just for the firm that is assisting the firm to digitize, but for the firm being digitized in accessing customers, services, products, etc. So yeah, I think those are really huge. Over to you, Mohammed Rizwan.
Yeah, that's very interesting observation about the assisted model. And one thing that I just want to highlight is there's two fundamental things that I think that needs to be addressed as well. One is in terms of the level of literacy that those being assisted that they need to have, because now doing things on a digital basis is going to give them a different experience and expose them to some of the new risks that they may not be familiar with. So this is where it leads to the second point, where those digital bank or those who are providing digital assistance need to have a framework about self-regulation as well. So this is one thing that the main regulator, like the central bank, would not be able to do effectively if all the obligation or the responsibility is back to them for them to supervise. Because you got to understand that for a dedicated regulatory bodies, they have three main functions. One is to authorize, where they give out the license. Second is where they supervise. And thirdly, they are actually enforcing when there's indiscipline. So some of this function needs to be delegated. And this is something not very well, not being done in a bigger fashion, especially in this part of the world, in terms of allowing self-regulatory organization to take that function. And this is pretty important because it has two-pronged, if I may say, key result. One is to educate the target group, especially those in the remote or the rural areas, to understand the implication of being digitized. And secondly, about the discipline that they need to have in managing those new risks that will come along with the digitalization. So this is something that we have highlighted in terms of managing something earlier where they said unintended consequences, to have a clear intention of how self-regulation could be part and parcel of education and the literacy program for this to actually become part of the outreach syllabus for us to reach out. So it's really great for us to empower them, but you got to understand that some of these may be subject to manipulation and scam, particularly for those who are not very familiar and not very well versed about the risks that they need to manage at the individual level or at the smaller enterprise level. That's another thing that I just want to add. Thank you.
Thanks for that. And I think it takes us back to actually the beginning, the idea of the need to focus on not only digital inclusion, but also digital and financial literacy. Well, we've actually made it to the end of our time in what has been one of the more enjoyable conversations I've had in a while. I wanted to thank you all really for some fantastic insights and a really good discussion. And hopefully somebody is out there taking notes, because that was tremendously valuable. So thank you all very much. Hopefully I'll actually get to see you sometime in person in the coming year, though Hong Kong is not making that particularly easy compared to the rest of your jurisdiction. So with that, I'll pass back to Win and Mushir and Alberto for the end of the session.
Thank you.
Thanks for having us.
Sorry, give us just 1 second to reset the screen. So thank you, Douglas, Rizwan, Pravina, Joel, and Monica. So we will be moving towards the conclusion of this event. That concludes the discussion under session 3. Just before we wrap up, a note to all the participants, we have a closing survey for today's workshop. It will be posted in the chat shortly. We thank you all for your participation and questions. I would like to reiterate that the case studies we presented today in session 1 will be available shortly on ESCAP's website. It will be available on ESCAP's website with a brief summary and key takeaways from today's workshop as well. So all the discussions from all the participants and the panelists today will be summarized into key takeaways towards the end of the document. I just want to check that, Alberto, you have access to the microphone and camera.
Yeah, I think microphone is okay. Camera,
yes,
yeah,
it should be fine now. Awesome.
Yeah, thank you.
So, yes, everything will be available on the website. We'll send an email out afterwards with kind of a summary as well. Thank you again for your participation, and I'll invite Alberto Iscut, Acting Chief of the Financing for Development section at ESCAP, for closing remarks. Thank you.
Thank you so much, Win. Well, I want to thank everybody, the panelists, for fantastic discussions. I have to say I learned a lot in this session. It was very interesting. And I want to also thank our colleagues, Douglas and Michelle, for very good support for this event. And especially I would like to thank my colleague Win, Vera Win, for very good organization and leading the organization of this workshop in a very good way. And finally, there are some colleagues working behind the scenes, Amir, Luciana, Pachara, Prani, which also made this event possible. Well, I would like to say this is a very important topic. I'm really glad there was good attendance from colleagues from different countries. And this is something that, this is what ESCAP, one of the things we do is to connect people from different countries, bring, experiences, bring experts from, different parts of the region, and then provide, information and exchanges of experience to countries from, to other countries in the region. But in addition to this type of activities, we occasionally have also ministerial level conferences to discuss more the policy making framework. And we are going to have an important conference coming up at the end of September. It's the Regional Economic Cooperation and Integration Conference, which happens every 4 or 5 years. And the issue of the digital transformation is one of the topics that it will be discussed. So I think this is a very good opportunity, especially for governments to participate and try to decide or to discuss how our regional commission can support the digital transformation in Asia and the Pacific. So what I have heard here, many things that are quite important. There are some that are more at the country level, about the setting up the proper policy frameworks, regulatory frameworks, and implementing infrastructure for real-time digital payments. And that is something that Asia and the Pacific is quite advanced. And many countries in the region have done, very good work, as we have heard today. So there are good opportunities for further exchange of experiences, and even for technical assistance to countries who may need this. So this is regarding what I have heard today. The issue of the international interoperability, I think, is quite an interesting point. And this is something I think where regional cooperation can play a role. We are seeing very good work done in the ASEAN region, as mentioned, between Thailand and Singapore. The payment systems now are connected, and there is a lot of action going on within, also with other countries within ASEAN. So this is something that, is something that can be emulated, can be considered for other countries besides the ASEAN countries. And this is some of the topics that could be discussed in our Regional Economic Cooperation and Integration Conference at the end of September. I heard, well, as we know, and we heard today, obviously payments is the main area of digital finance. But I like the conversation towards the end about other extending services to other areas of finance, and I was particularly impressed. I was reminded by Brad in the first panel about the importance of money lenders in many countries of the region. Quite scary. If I understood well, it was like 20–30% interest per month. I'm not surprised. I think this is probably what happens. And this is, if you go to the bottom of the pyramid, I mean, this is one of the areas that probably people in that segment really are most in needs, because they don't have access to any form of credit, and they have to rely on these, treasury expensive sources. So this is something that I probably needs further consideration, because this is probably an important need at the bottom of the pyramid. Of course, there is the perennial issue of basically MSME financing. We had a number of events recently, one in Bangladesh, another in Bhutan, and the digital transformation can definitely help. So this is another area that we need to also to be aware and try to see how there can be more products customized for this service. Talking about that, we have a paper prepared by Douglas and other colleagues of him. Is posted in the event page for this event. So please go and take a look. It has a very good summary of information on that particular topic. So I think that really will conclude my closing remarks. I think it was fantastic. I particularly have to say I enjoyed much the discussion about this assisted model towards the very end, and highlighting the importance of financial and digital literacy is quite interesting, and I haven't heard about this particular topic in the past. So anyway, thank you so much, everybody. Thank you for your participation, and I hope that we'll see you again in a future event. Thank you. Wayne, over to you.
Thank you. And with that, we'll close the session. Again, for all the participants, there's an evaluation form in the chat. We will send that out via email again. Again, thank you to our panelists and to all the distinguished participants. Goodbye.